People are always asking me, Todd, when do you think mortgage rates will come back down? Now, I'm not a loan officer, but I do believe we've yet to see the peak in mortgage rates. I believe they will climb much higher. So let's take a look at what's happening with home prices nationwide and what higher mortgage rates might mean for buyers and sellers over the next couple of years. Welcome back and thanks for watching this video. If you're new to the channel, I'm Todd Sachs, a real estate broker in Maryland, and I've been serving the housing industry since 1989. Everyone who's looking to buy or wanting to sell their home is curious, where are mortgage interest rates headed? Interest rates are critical to the housing market as very few people can afford to pay cash for a home. Therefore, home buyers are forced to finance a portion or all of their home purchase to make homeownership a reality. Higher interest rates means higher monthly mortgage payments on existing home inventory, knocking most buyers out of the market altogether. Now, what we've been seeing is record low housing inventory, and this is fueled by the fact that approximately 92% of homeowners have a mortgage rate of less than 6%. About 83% of homeowners have a mortgage rate below 5%. 62% of homeowners have mortgage rates below 4%. And check this out, about a quarter of existing mortgages are below 3%. And this, guys, is exactly why homeowners are bunkering in where they live. Unless being forced to sell to relocate for work or some other reason, they're not moving. Should any homeowners sell right now, they'd be paying more money for less house, period. So it's not hard to realize why people are staying put. Now, for many of these homeowners staying put, they'll probably lose quite a bit of equity in their home over the next couple of years. And that's saying that they have equity at all, as many homeowners are probably starting to be underwater. But keep that cheap mortgage, homeowners. So what do I mean when I say homeowners may lose equity on their home? As lack of affordability continues to be an issue in the U.S., home prices will probably need to come down quite a bit in order to attract home buyers that simply don't make enough money to buy a home at the current mortgage rates with the current prices of homes. Now, I hate to tell you, but I've been saying what you're now starting to realize for quite some time. And by the way, less people are disagreeing with me now that they're seeing their personal financial picture fade away with the higher cost of life's necessities skyrocketing yet again right before our very own eyes. And as history tells us from the housing crash of 2008, it all started showing up first in the new home construction sector. We see the crash show up here first because there's nobody living in these homes, and it takes quite some time for existing home loan delinquencies to show up in the market. And with the new home builders, they're actually incurring debt every single day a home or a lot sits without being sold. And if you're to go buy a new home, as this seems to be where much of the available home inventory is today, according to the Census Bureau, in August, the average new home sold price in the U.S. was $513,000. So let's break this down. If you bought a new home for $513,000 and put down 3%, which is about $23,000 including closing costs, at a 7.5% mortgage rate, your monthly payment, including property insurance and property taxes, would be about $4,700 a month. So will this be just like 2008 or worse as we start to see home builders lose their tails on home price declines? Well, let's see by taking a look at this article on CNBC. So the first thing I'd like to say is that if you make less than $75,000 a year, you probably can't afford to buy many of the homes in the market today. This article says that you probably can't afford to buy a home in these 12 cities. For middle and lower income families, homeownership is becoming increasingly unattainable. Really? It also says that households earning the U.S. median income can only afford a fraction of the homes in 100 largest U.S. cities. And this, guys, is brought to you by the National Association of Realtors and Realtor.com. And also in this Newsweek article that was published on September 19th, it says home building collapses as market struggles. It goes on to say that new home construction in the U.S. plunged in August to a 3-year low. It says that higher mortgage rates above 7% combined with low resale inventory and higher home prices are slowing down housing production, as many first-time home buyers and younger households are struggling to purchase an affordable home. And by the way, this is from the National Association of Home Builders. And despite the Fed pausing in September to raise interest rates yet again, it goes on to say in this article that unfortunately we expect mortgage rates to remain at higher levels as the Federal Reserve is likely to increase rates one more time later this quarter. It also says the entire nation is feeling the pinch as home building was down across the country. The National Association of Home Builders pointed out that compared to last year, single-family and multifamily starts were down nearly 23% in the Northeast, 14% in the Midwest, and nearly 9% in the South, and about 16.5% in the West. So here we go, folks. This is exactly what I experienced, as well as many home builders experienced in 2005, 3 years before what they coined the Great Financial Recession of 2008, where from 2007 to 2012, about 6 million households were foreclosed on and put out on the street. So now, before we go any further, let's see what's happening with home prices across the country. Now, in this chart, we're seeing the comparison of the average sales price of houses sold, the Case-Shiller Home Price Index, and by the way, Case-Shiller measures the changes of the value of the U.S. residential housing market by tracking the purchase prices of single-family homes, and we're looking at median sales price for new homes. And two things I'd like to point out. First, as you can see, leading up to the housing market crash of 2008, and by the way, that was just 15 years ago, as we hit the peak in 2006, you can see that this housing market bubble is nowhere near the housing market bubble that we're experiencing today. And you can see in this chart that the recovery started around 2012 and continued up to about 2020 here. And then look at this line. Look what happened from 2020 up till about April or June of 2022. This is when our government artificially stimulated the U.S. economy with record-breaking money printing, record-breaking stimulus, and record-breaking low mortgage interest rates. And now I'm afraid it's time to pay the piper what is due. So now let's go ahead and zoom in on this chart so we can see what's happening right now. And what I really want you to focus in on is the average sales price of houses sold. And that's this blue line right here, right? That declining blue line. And it's awfully funny that it seems like it just kind of ended on a downhill slope here in Q2 of 2023. Where's the rest of the data, y'all? However, we can look here that the median sales price for new houses sold in the U.S. seems to have jumped up to July. Where's the rest of the data? But really, I think what has happened here is though they did seem to increase their prices when they thought, geez, guys, we're the only ones with the inventory. Let's go ahead and raise our prices. But now, guess what? Things are starting to soften so much that they're giving the house away. Well, not really, but they are giving better prices, more incentives, like loan buy downs, mortgage rate buy downs, as well as some additional concessions like maybe finished basements and upgrades and all other kinds of things to motivate these buyers that just simply can't afford the monthly payment. So now that we know that one of the primary reasons for skyrocketing home prices is the never seen before cheap money as a result of the Fed taking central banks' interest rate to almost zero, creating the opportunity for banks to borrow money from the Fed at almost par to offer us unrealistic consumer loans to Americans to help us get buried in debt. Mortgage rates were so cheap, it allowed home prices to skyrocket as a result. Now, guys, it's time for the 3-year party hangover to take its toll. So let's have a look at this Yahoo article that was just published on September 21st of 2023. It says here, housing economist warns of 8% mortgage rates after home sales disappoint. It says that home buyers made fewer deals in August as rough housing conditions persisted. That may get even worse, one housing expert said. And then the chief economist for the National Association of Realtors, Dr. Lawrence Yoon, said in a statement, in the short run, it's possible that mortgage rates may go up to 8%. And guys, take a look at this chart that says existing home sales fall again in August. Man, we are almost down to 2008, 2009 numbers. And as we scroll further down, we can see that mortgage rates top 7% for 6 weeks in a row. And how about this chart? I mean, look how mortgage interest rates have skyrocketed. And after hearing our Fed, Jay Powell, this week say that interest rates are going to kind of stay high for a few more years, they mentioned like 2025. And that's kind of interesting because isn't that when our new president will take office? And guys, this seems like deja vu, like when President Obama took office in 2009 and he was handed a plate of, just a terrible financial situation, one of the worst financial crises we've had since World War II. And this one may be worse than that. Now that I think everybody can agree that interest rates will remain elevated to try and tame inflation, let's have a look at this Brookings.edu article. With the title and content of this article, it seems like they had some kind of a crystal ball when they were publishing this article back in June, because they say high mortgage rates are probably here for a while. And it goes on to say the factors contributing to a spread between mortgage and the 10-year Treasury bond rate. And we know, guys, that mortgages don't really follow the Fed overnight trading rate that Powell is raising, the interest rate on. But it certainly does seem to go hand in hand with the Fed rate, because as the Fed rate goes up, so typically does the 10-year Treasury bond, because let's face it, the government needs money. And the 10-year Treasury bond is basically what you're guaranteed as an investor in a safe bet with a 10-year note. And as those interest rates rise, for investors to actually invest in mortgages, they need to be compensated much more. So here we can see in this Brookings.edu article the correlation between the 10-year Treasury and mortgage interest rates. But the difference here lately, guys, is it seems the spread is actually going further apart, where the mortgage rates, in order to get investors to invest in a 30-year fixed rate mortgage, they want even more profit today than they have in history. So I guess it doesn't take a rocket scientist or a real estate broker in this case to tell you that mortgage rates are probably on their way even higher. And guys, this is one of the reasons why I've been saying since April of last year that I think home prices are going to decline and correct pretty significantly, simply because the buyer demand is on its way backwards, as these mortgage rates are just making it almost impossible for anyone to afford a monthly mortgage payment with these current home prices. So this is my opinion, guys. I'd love to know yours. You can drop it in the comments below. And if you got some good information out of the video, smash that like button. It'll let me know that you did. Don't keep this content all to yourself. One of the ways that we can get the message out that buyers need to be really cautious and make sure they're prepared financially before buying a home is to share this video with your family and friends. As always, I appreciate you subscribing to our channel. If you haven't done so, you could do so now. Hit the alert bell. You'll know every time I upload content just like this. See you next time. Sachs Realty, Maryland, broker number 607720, office number 443-318-4514, equal housing opportunity.